Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, August 24th, 2021, and I'm pre-recording this Trading Places Live just a couple hours early here. Futures currently are looking at another positive open. That's good for the market. We saw a nice move yesterday, which is a little unusual actually for the Monday after options expiration. But we saw most areas of the market doing well. Defensive areas struggled a bit. We'll talk about that in just a couple minutes. Let's take a quick look at these futures, though. Right now, I've got the Dow Jones futures up 50 points, the S&P up 7.5, and the NASDAQ up 37. So it does look like we'll get off to a pretty good start on Tuesday. So that is good news. Looking at a couple of the other areas of the market, got Bitcoin up another $77. Still sitting slightly above that, or excuse me, just below that 50,000 level. Oil up at buck per ounce to 1807. Silver up a little, copper up a little. So it looks like things are still rebounding pretty nicely. Crude oil up another $1 per barrel, $66 and change. We're going to be watching to see whether or not crude oil can get back through its 20-day EMA after breaking down last week. But yesterday was at least a very good start, and this morning's adding to some of that strength. We're going to get into the following in just a couple minutes. Let me walk you through today's agenda. So we'll go into the daily market recap, talking technically, going to talk a little September seasonality for you today. 52-week highs. Earnings spotlight, and the 3 you must see. We'll wrap up with the 3 you must see. Before we get into any of that, though, I do want to take you over to Earnings Beats. For those of you who are new, if you scroll down, go to earningsbeats.com. That's they're both plural, earningsbeats.com. Head over to or just scroll down the page a little bit. You'll see the subscribe to the free Earnings Beats Digest newsletter. This is a newsletter that gets published 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name, email address, hit that subscribe button. We'll make sure we get you set up in our community. We do a lot of free events, and we reach out to our community when we do those events. So there is, besides getting the newsletter, there's also some other benefits as well. No credit card required. It is completely free, and you can unsubscribe at any time. Normally, I write about earnings reports, relative strength, talk a little bit about gaps, market makers, industry groups. Sometimes I'll bring up the seasonality. I mean, it's very educational in nature. And then also, I think, can provide you some nice trading candidates if you so desire. Also on this page, you can see, you can click on this historical performance, get an update on how we're doing in our portfolios. We do 4 different stock portfolios. You can see the performance down here along with the ETF portfolio that we do as well. So it just gives you some performance of how we've done. I think we've done really well versus the S&P 500 over time. So check all that out. If you are interested in becoming a full member, we have a 30-day free trial. So all you have to do to start your no-cost trial is click on that button right there, and we'll get you set up. You can try our service for 30 days. And see what you think. Those portfolios, you'll be able to see all the stocks that we have in those portfolios. We have 10 equal weighted stocks in each portfolio. We switch them out every 90 days. So you can see which stocks we're riding with right now. We just changed those portfolios on August 19th. That was last Thursday. So still pretty fresh. We'd love to have you. All right, let's move on to the daily market, excuse me, daily market recap. So on Monday, we had a really nice day. You see the Dow Jones Industrial Average up 216 points. Still a little work to do to get to that 52-week high. The S&P 500, however, up 38 points, did set a new 52-week high, all-time high. And the NASDAQ up 228 points, closing at a new all-time high. Very, very strong action. And look at the PPO starting to turn up from the center line. AD line strong. NASDAQ looks really strong to me here. I know it's August. Going into September, historically not a great period of the year, but I do like to put, I like to be aware of the seasonality, but at the same time, you can't overlook what's taking place in the market. And we're getting breakouts to all-time highs. That's almost always going to be bullish. Mid caps, nice move up about 0.9%. Small caps up 1.2%, almost 1.25%. Both moving back up through their 20-day moving average. And in the case of the mid caps, up through both the 20 and the 50-day moving average. Small caps still have a little bit of work to do. Energy stocks leading the action. That was good because on this pullback here, you can see the lower prices, higher PPO. We have a positive divergence. My concern is that crude oil prices broke down pretty considerably last week. And so as both crude oil prices and the XLE rise, I'm going to be watching a couple of things. Number one, the 20-day EMA, and number two, recent price resistance. I'd like to see the XLE get above both. And the crude oil prices I'd like to see get up there as well. Both have a little bit more work to do. If we hit that 20-day and we reverse and start moving lower, that's going to be very bearish for the group. So just kind of keep that in mind as you go forward. I would not be buying the XLE blindly and not paying attention to what's going on in these charts. Be careful if it reverses and starts to head lower again. Technology, 3 white soldiers. If you're a candlestick fan, beautiful move up there. That's a very bullish formation. Comes off of not quite a 50-day test, but pretty close to a 50-day test after we'd gone sideways for a month. The XLI hit support down around 175. Nice bounce the last couple of days, getting back up through the moving averages. Another up day on Tuesday today would be very strong. Communication services went up, tested the all-time high, couldn't quite get through. We'll be watching to see if we can close above 84 today. And then finally, the one area of considerable weakness was utilities. But utilities have had a nice run here over the last 6-7 weeks. So not too surprising to see a little profit taking. I'd be watching the 20-day EMA for a little support. All right, 10-year Treasury yield. I do want to mention coming out later this morning, probably, well, actually, it'll be before you get this recording. July new home sales will be out. Comes out at, I think, new home sales. Not sure if that one's the 8:30 or the 10. I think that's the 8:30 report. I'll tell you what time it is. Let me just look it up real quick. Most of the housing reports come out later in the morning, but there's one, and I'm trying to think which one it is. Comes out at 8:30, but I'll let you know here. No, new home sales is 10 a.m. I should know that. But so the market will open a half hour or so. We'll get a look to see what's going on with the new home sales. That can impact your 10-year Treasury yield and the interest rates. We'll see if new home sales come in really strong. The economy is showing more strength. We could see a sell-off in bonds, sending yields higher. If that is the case, I think as long as we stay below about this 138, 140, 141 area, we're in this sideways consolidation period off of a downtrend. Ultimately, I know the growth stocks would like to see these yields fall lower. I think the fact that the yields have been coming down now for 5 months tells us inflation's not a problem. It's really all about growth. Can we sustain this growth with the COVID variant? Some of those cases surging across the U.S. Don't know. Don't have an answer for that one. But I would continue to watch this 10-year Treasury yield, because typically when the yield goes down, the S&P 500 tends to struggle more. In a secular bull market, it's not nearly as bad as if we were in a secular bear market. I mean, if we have interest rates going down in a secular bear market, that normally means the stock market is moving down very rapidly. In a secular bull market, the bull market actually tends to still hold up well. Because what you have to understand is that in a downtrending Treasury market, money is rotating into bonds. So as bond prices go up, yields go down. Always that inverse correlation. So anytime you got money going into bonds, that's money that's not going into stocks. Usually the reason you would go into bonds are the exact reasons why you would not want to be in stocks, and vice versa. So I think the growth stocks, if there's no threat of inflation, or as the threat comes down, and interest rates go lower, that's going to be helpful to growth stocks. So keep that in mind if the 10-year treasury yield continues to drop. All right, let's move on. I want to talk a little bit today about seasonality coming up. We've got September coming up. Yeah, December's coming up too, but that'll be a little further down the road. Don't worry. Don't need any Christmas presents just yet. We got September 1st. So we got Labor Day, and then we got, October, Halloween. We got lots going on still rest of the year. But it is amazing how far and how fast we've moved into 2021. Semiconductors remain in this uptrend, but the thing I wanted to point out here is the seasonality. So let's take a look here. And I'm going to pull this up. These groups I pull up, I'm going to pull up relative to the S&P 500. Now I'm going to go back 9 years. And the reason I'm going back 9 years, in 2013, that's when the S&P 500 broke out above its 2000 and 2007 highs. So in my book, the secular bull market began in 2013. Until then, we didn't know we were breaking out. We didn't know if we were out of the bear market. So a little different. A lot of folks look back to 2009, say this current bull market started back then. Well, Monday morning quarterbacking, yes, that's when it started, but you didn't know that until you got the breakout to confirm it in 2013. So from 2013, I want to look at how semiconductors have performed relative to the S&P 500 and look at September. September, semis have outperformed by 2.2 percentage points on average. That's better than every month during the year except for May. So this is a really good month coming up for semiconductors relative to the S&P 500. Now let me pull up the second one I want to show you, which is apparel retailers. Apparel retailers, when you look from January through July, they underperform the S&P 500 in every month except February. And you can see they don't outperform. Oh, actually, I only went back 5 years, but still the same. If I go back these 9 years, still January through July, all of these have underperformed. Every month, apparel retail underperforms the S&P except February. But once you get into August, and this is kind of interesting because, let me see if I can, no, it's not going to come up that way. Let me, I'm coming right back to that chart. Okay, so here is that relative chart I was just showing you, but I want to also pull up a chart of apparel retailers because look what's happening in August. After a few months of consolidation, we're actually breaking out here in August. And this is when seasonal strength tends to pick up. So we're getting the technical strength as we're expecting more relative strength seasonally. So this is a group certainly to keep an eye on as well. Railroads relative to the S&P, 9 years. Look at railroads in September. Since this bull market began, secular bull market began, railroads have outperformed the S&P 500 every year in September, averaging 3.5% outperformance. November is the only other month close, 3.2%. So railroads, 2 of their 3 best months come up in the next 3 months. All right, let's go with footwear. Footwear, you can see up about 75% of the last 9 years. Actually, because we haven't gone into September yet, that would be 8 years. So 6 out of 8 are higher, which is 75%. But look at the outperformance. September, footwear outperforms by 5.9% on average during the secular bull market. June at 4.7 is the only other month that's even close. Nothing else comes close to September. So definitely another area of the market that I would be checking out as we move into September. Nike tends to love September, and I think it's back to school theme. Then you've got airlines. So airlines, you can see September, 88%. That would be 8 of the last nine, actually 7 of the last 8 years. 2.6% outperformance. But look at October and November. I mean, look throughout the year. There is hardly any strength. February, you got a little bit of strength, and that really is it, except for September, October, November. So airlines, definitely a group we want to at least be considering. I'm not a fan of the group. I don't like the way they've set up, but we have been moving lower and lower. We have a slightly lower close, higher PPO. We're going into this period with positive divergence. So if airlines get moving, definitely keep this in mind because this is their seasonal period. All right, let's move on and talk a little bit about some 52-week highs. All right, so 52-week highs, going to start off with ACN, and I'm going to pull these up on a relative basis. Actually, this one I want to pull up with that PPO showing. Let's do the PPO. Actually, we can do it this way. I've got another chart set up. No, I thought that one had the PPO on it. No, this one, well, let's just go back to that regular daily chart. All right, so the thing I wanted to point out here on Accenture, not every breakout is created equal. So here you've got prices that are moving higher. Everything looks pretty good, but we are overbought and we have a negative divergence in play. So the last time that ACN moved up was putting in new highs with a negative divergence. You can see what happened. We pulled back, 50-day test, reset the PPO, and then we started up again. We got a similar looking chart now, and we've got to be a little careful. Now, volume was a little heavier yesterday, but if we fail to hold that 330 breakout level, I'd be careful and be looking maybe for a 50-day test. That would be back down around 310. Still like the chart longer term, but you just got to keep in mind these negative divergences are signs of slowing momentum. And so when you get that, you got to at least be considering the fact that, hey, we could be pulling back for a little while before we start higher. Not only did we see that with Accenture back in April, early May, right here, but look back in December when we gapped up. The PPO could not take out the high. We never could get through that initial high, and look what we did. Went back down. There's that PPO coming down. So no guarantees. There's never any guarantees. But this is just telling me that it's maybe a little riskier to take a position here, knowing that we've got this negative divergence in play. All right, EVTC. Now this one, after going sideways for a while, you can see the PPO back down near the center line. Now it's breaking out, and it's doing so. It did so with heavier volume. So we're getting that breakout. We pulled back, held support, held the 20-day EMA, and now breaking back out again. This, I believe, is in the financial administration area, and it's looking really good to me. I like the breakout. I like the breakout on volume. I like the retest, and then the next breakout. The only thing that maybe is a little bit would make me a little nervous on this stock is it can trade, you know, I mean, it's generally going to trade at least 150,000 to 200,000 shares a day, but this is getting on the lighter side of volume for me. Next up, ETR. Now, this is a utility. Now, so, you know, you're not thinking Moderna. You're not thinking something that's going to just take off. But for those who maybe are a little bit more conservative, like the idea of playing breakouts, but aren't interested in a stock that might be down 15, 20% over the next 3 days, ETR might be the type of stock. Now, I still would prefer it on a pullback to test the breakout level around 110. And as it gets closer to that 20-day, but I mean, that's $4 from here. That's not a lot. But the breakout occurred on nice volume. We are overbought, so a pullback would be nice. That PPO looks very strong. Any kind of a pullback on ETR would look pretty good. Next up, VTI. I wanted to mention VTI. This is the Vanguard Total Stock Market ETF. If you look at a lot of the breadth indicators, it would suggest that, hey, not a whole lot of companies and stocks are participating in this rally, which might give you a little pause. You know, you might have a little concern about the market based on that. I think you got to be a little careful in how you view breadth and what you're looking at. Keep in mind that we're coming out of a pandemic. And so many stocks took off, and a lot of these smaller companies that took off are taking a while for their fundamentals to catch up to their stock price. And as a result, many of them have been going sideways for months and are below their 50-day, below even their 200-day, but they're consolidating gains from many, many months ago. I would be careful reading that as a negative. And that's part of the problem when you just look at numbers that come up on charts or lines that come up on charts without just thinking through everything in the market. I believe that we've got period or areas of the market that continue to consolidate and will break out in time. And so many of those breadth indicators will turn back up again. But in this case, this Vanguard Total Stock Market ETF, this takes into account more stocks than just the S&P 500, and definitely more than something like the QQQ, which tracks the NASDAQ 100. If you look at the main, the truly mega cap growth stocks, I'm talking Apple, Microsoft, Facebook, Google, Amazon, Tesla, all those names, NVIDIA, throw that one in there. That one's rolling again. If you take a look at just those companies on the NASDAQ, their top 10 holdings are 57% of the entire QQQ. The Spider, those same holdings are about 27%. On the VTI, that number drops to about 22%. My only point here is that this is a more of a broad index than, say, the Spider or the QQQ. We broke out to a 52-week high on it yesterday. So there's more than just those mega cap growth stocks that led this rally yesterday. Keysight Technology. Really like this test of the 20 and the bounce that was earnings related. Went below, came right back up and broke to a new high. And this is a stock that had been consolidating for quite a while before recently breaking out. Looks like it's got more room to the upside. Aon, big volume breakout recently. Check out that move in July, moving to new highs. Simply went sideways and then off to the races again. Stock will pull back at some point. 20-day test seems like a pretty good entry there. ServiceNow, look at the sideways consolidation here for many, many months. Look at the breakout. Look at the volume pickup yesterday on that breakout. ServiceNow moving to an all-time high. Very, very strong. Again, not all breakouts are equal. KNX, this is a trucker, false breakout. PPO is not at a new high, false breakout. Volume just kind of so-so. I'd look for more sideways consolidation. Now, volume picks up, we close above 51, then I would be much more bullish. But I don't like these false breakouts and failures. So I would be a little careful. I'd be thinking maybe in terms of a 48, 49 move to the downside before possibly moving back up to breakout. But industrials, transports, they do tend to really like the next few months. So keep that in mind. If KNX makes the breakout, especially if that volume confirms, it is in an area of the market in the transports that normally do well during this upcoming period. COO, this is Cooper Companies. Big breakout. Look at the volume coming in. This is another one that can be a little light on volume from time to time, but it's a $400 stock, 440 versus the last one we looked at that, what was it, EVTC? I think that was a $40 stock. So it's not quite the same when you're trading 200,000 shares of a $400 stock versus 200,000 shares of a $40 stock. I think you quickly should be able to understand the dollar volume will be much higher on this one. but I love the breakout, love this volume coming in. PPO looks good. 20-day test would be a great entry here. Last two, excuse me, Estee Lauder making a breakout. That PPO starting to turn up from right around that center line. I like it. Big move up off its 50-day with heavy volume. I believe that was earnings related. EL moving higher and breaking out looks good. Last one, TJX. Sideways consolidation for quite a while, getting a breakout, and look at the volume coming in. Very strong volume to support this. PPO looks good. TJX looks good. So those are not all the 52-week highs. There were a ton of them. This was actually just New York Stock Exchange stocks that were up over, out to new 52-week highs that I just thought looked interesting. I wanted to talk about. Excuse me. All right. The earnings spotlight. Hold on one second. All right, let's move on and take a look at PANW. So Palo Alto Networks reported this morning $1.60 versus $1.44. I saw the stock was up 11.5% after hours or pre-market. So we're looking at a company that is going to break out above that prior high. Very, very, very strong report on Palo Alto Networks. Going to be interesting to see if it gaps up above that 410 level. Does it just continue to go higher? Are we going to see the hollow candle, or are we going to see a false breakout with a black candle, which then would suggest maybe we'll see a little bit more selling, maybe back down to the moving averages before turning higher. So it's not just where you open, it's also how you finish, but any open above 410 would be very bullish. Another one that reported, this is Riot Blockchain. Both of these companies reported, I think, yesterday after the bell. Riot, though, expected to come in at 5 cents, came in at 13 cents. This is a heavily shorted stock. So a move through 40, I think, would be very bullish. Now, it's only up fractionally. Doesn't look like it's going to open anywhere near 40 unless things really pick up later this morning before the open. But I would still be watching this 40 level. You've got resistance there, technical resistance. You got a strong fundamental report coming in. If you get that breakout with many, many shorts on board, that would likely trigger just a landslide of buyers coming in. So keep this one in mind, especially if you like to follow heavily shorted stocks. All right, let's move on to the three you must see. I'm just going to wrap up talking about three energy names that did very well yesterday and show you a little bit of the problem coming up. You can see the stock's been moving lower. You can see it broke down. Volume's been heavy on the selling, but we rebounded. Can we get through that 20-day? That's going to be the first test for APA. How about Occidental Petroleum? I'm seeing the same thing. Pretty big volume, selling off, failing to hold support. Now it's coming back up through that resistance level, but can we get through the 20, which has been failing? Don't know. And then finally, DVN. This is Devon Energy. This one doing a little bit better than the others in that it held support. So on a relative basis, this one's a little better performer. I'd be okay with this one. If I was going to trade, this would probably be more of my favorite, although it's already back up into the middle of a trading range. But as long as Devon holds that 24 level to the downside, I still think it's sideways consolidating within an uptrend, whereas the others look like they are starting to roll over. Anyhow, that's it for me. Appreciate everybody tuning in. I'll be back on Wednesday for your next Trading Places Live over at earningsbeats.com. Have a great day, everybody. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.